Let's talk about Bengaluru for a moment.
Yeah.
If you close your eyes, you can almost picture it, right?
Oh, yeah.
That soundscape, it's just this symphony of horns,
Yeah.
engine buzz, everything moving.
Constantly. And the smells too, dosa, coffee, but also, the exhaust.
Exactly. And weaving through all that movement, what do you see everywhere? Bikes. Just countless bikes.
Carrying people, parcels.
And increasingly carrying dinner.
It's an incredible scene, so dynamic, really captures the energy of India's digital economy.
Totally.
And that sheer volume of movement, especially on those bikes, well, it's the backdrop for a really major challenge brewing in a market that affects millions every single day.
You mean food delivery?
Exactly, food delivery.
And when you think Indian food delivery, for a long time, it's basically been two names, Zomato and Swiggy.
Right. They're not just players, they're giants. They've dominated this space for years now.
We're talking about a huge market, right? Valued at what? Something like $9.5 billion this year, 2024?
That's the number. An enormous market. And between those two, Zomato and Swiggy, they hold maybe 95% of it.
95%. That's pretty much a textbook duopoly.
It absolutely is. They've built these huge operations, all based on speed, convenience, connecting restaurants and hungry customers.
But it hasn't all been smooth sailing, has it? There's been some tension under the surface.
Definitely. You hear it from the restaurants particularly. They feel squeezed by the commissions.
Which can be pretty high, I understand.
They can range quite a bit, yeah. Anywhere from, say, 16% up to sometimes 30%. That's a big chunk.
Wow. And then for us, the people ordering, I mean, you've probably seen it yourself. Those delivery fees, they can jump around like crazy.
Yeah, it depends on the time, the weather, where you are.
It feels less like a predictable fee and more like, I don't know, a surprise tax just because you're hungry.
Someone called it a surprise GST on your mood, which kind of nails it.
Yeah. So you've got this massive profitable market, but maybe not everyone's feeling totally happy with how it's working.
Precisely. And that's the environment where a new challenger is stepping in. Someone you might not immediately link with, say, delivering your biryani.
You're talking about Rapido,
Rapido.
the bike taxi people. If you need a quick, cheap ride across town, especially in heavy traffic, they're kind of the go-to.
They are the undisputed leader in that bike taxi space, and their network is just colossal.
How big are we talking?
Think about 4 million registered riders, capitans they call them.
4 million.
Yeah.
Already out there, navigating that exact chaos we were just talking about in Bengaluru and other cities.
And the thing is, Rapido isn't just like dipping a toe into food delivery. It feels much more aggressive than that.
More like a full throttle charge.
Exactly. Leveraging that massive existing fleet and aiming it squarely at Zomato and Swiggy. It's a bold, you could say, high-stakes move.
Okay, so that's what we're diving into today. We want to unpack Rapido's plan here.
Mm-hmm.
How exactly do they think they can challenge this duopoly? A duopoly that's, frankly, seen off other challengers before.
Yeah, many have tried.
We'll explore what this could mean for the company, sure, but also for the restaurants, the riders, and, importantly for you, the customer, ordering the food.
And we need to look at the critical test that's coming up very soon. That could really decide how this whole thing plays out.
It feels like a really gripping story unfolding right now on India's streets. A classic disruption play.
Definitely. So let's get into it. How does Rapido, the bike taxi king, plan to take on these dedicated food delivery giants?
What's the strategy?
Well, their core idea revolves around this new platform or service they're calling Only.
Only. Okay, and the clever part, or maybe the risky part, is how they're staffing it, right?
Exactly. They haven't gone out and said, okay, let's recruit a whole new army of food delivery riders. That's not the play.
They're using the ones they already have,
Yeah.
those 4 million captains.
Precisely. Think about it. These riders are already out there doing millions of bike taxi rides every single day. What, maybe 3 to 3.5 million rides daily?
Okay,
But they have downtime, right? Gaps between passenger trips.
sure. Waiting for the next ride.
Rapido's plan is to use those idle periods, especially around lunch and dinner times when food delivery demand spikes, but maybe bike taxi demand dips a little.
That makes sense.
They're just adding food delivery as another type of task their existing riders can pick up.
It's classic cross-utilization, getting more out of the assets they already control.
And from Rapido's viewpoint, this means, and this is key, zero incremental capex.
Meaning no big upfront investment.
Right. They don't need to buy thousands of new bikes or go through the whole costly process of recruiting and training a separate food delivery fleet. They're essentially just turning on another tap for their existing network.
That must give them a huge cost advantage compared to Zomato and Swiggy, who built their fleets from scratch specifically for food.
It's a fundamental difference in the cost structure.
Yeah.
Zomato and Swiggy have massive investments sunk into rider acquisition, training, dedicated support, all just for food. Rapido starts with this enormous already managed base. It's not just about slightly lower commissions, it's about potentially much lower operating costs overall.
And that cost advantage flows directly into their pricing strategy, which seems to be their main weapon here.
It's definitely a major differentiator. For restaurants, the headline is those commissions.
Much lower, you said.
Significantly lower. They're proposing rates between 8% and 15%. Compare that to the 16% to 30%, or the blended average of maybe 21, 22% restaurants might be paying the others.
Wow, 8 to 15 versus potentially 30? That could make a massive difference to a restaurant's bottom line.
Especially for smaller, independent places operating on thin margins, it could be transformative.
And they're also pushing restaurants on price parity, keeping online and offline prices the same.
They're encouraging that, yes.
Right.
Which is something, customers often complain about seeing higher prices on the app than in the restaurant itself.
Definitely.
Yeah.
Okay, so that's the restaurants. What about for us, the customers?
For customers, they're aiming for predictability, fixed delivery fees.
No more guessing games.
That's the idea. They're saying 25 for orders under 400 and 50 for orders above that. Simple, fixed.
That's a stark contrast to the dynamic pricing we're used to, where the fee can suddenly double because it's raining or it's peak dinner time.
Exactly. It removes that surprise GST on your mood. You know what you're paying up front.
They must have some tech behind this to manage riders doing different kinds of jobs.
Oh, for sure. Their main Captain app is already built to handle multiple task types. Rides, parcels, they do courier stuff too.
Right, I've seen that option.
So now they're integrating food into that same system, using algorithms to hopefully optimize routes, figure out the best task allocation, keep riders busy, and maximize their earnings by maybe linking a ride, then a food delivery, then a parcel drop-off.
Makes sense, trying to keep the bikes moving and earning.
And it's probably worth mentioning, they're not entirely new to logistics. They have done delivery work before.
Oh, really?
Yeah, they've worked with platforms like ONDC, the Open Network for Digital Commerce. And here's a bit of irony. Apparently, they've even handled some last-mile deliveries for Swiggy in the past.
For Swiggy themselves. Interesting. So they have some operational chops already.
Some foundational experience, yeah. They're not starting completely cold.
And I heard something about a different payment model for restaurants, too. Not just commissions.
That's right. Besides the lower commission option, they're also offering a subscription model, like a software as a service or SaaS approach.
So a restaurant pays a flat monthly fee instead.
Exactly. Pay a fixed fee, and you don't worry about per-order commissions. This isn't totally new for Rapido either. They actually shifted a lot of their bike taxi drivers onto a similar subscription model back in 2023.
And that worked out well for them.
Apparently so. It was seen as a key factor in helping them reach that $1.1 billion valuation. So they're applying a playbook that's worked for them before, just in a new vertical.
Okay, so it's a pretty comprehensive plan. Use the existing network, slash costs and commissions, offer fixed fees, use tech to juggle tasks, and even offer alternative payment models.
It's a multi-pronged attack, definitely challenging the established way of doing things.
But let's be real. They're not exactly walking into an empty field here. Zomato and Swiggy are, well, Zomato and Swiggy. They didn't get to 95% market share by being slouches.
Absolutely not. These are incredibly powerful, well-funded, and frankly battle-hardened companies. They've been doing this for over a decade.
Their infrastructure must be massive.
It's incredibly mature and fine-tuned. Think about their delivery fleets. These are dedicated fleets. Zomato has around, 0.44 million riders just doing food. Swiggy's even bigger, maybe 0.53 million riders.
Solely focused on getting food delivered.
Yes, and that focus translates into their biggest strength.
Speed. They really pioneered that fast delivery standard, didn't they?
They did. They set the bar. Hitting that sub-30-minute mark is crucial, and they often manage it, sometimes even quicker. Their entire system, their tech, their operations, it's all optimized for getting hot food to your door fast. That reliability and speed is, core to their brand promise.
Plus, they have deep pockets, years of investment, brand building.
Huge amounts spent. Zomato alone, just between 2020 and 2022, spent something like $400 million on advertising and promotions.
400 million.
Yeah. That buys a lot of brand recognition, a lot of loyal users who are just baked into using their apps.
And there's been a shift recently, hasn't there?
Yeah.
They're not just chasing growth anymore.
That's a really important point. The focus now is very much on profitability. After years of burning cash to grow, The mandate has changed.
So they're looking at margins now.
Exactly. Zomato is targeting around a 5% adjusted EBITDA margin that's a measure of core operational profit. Swiggy is pushing hard for profitability too, especially with a potential IPO on the horizon.
And are they seeing results?
Seems like it. Zomato's parent company, Eternal, just reported a big jump in revenue, like 64% in their last quarterly results for Q4 2025. So these companies are actively optimizing, getting leaner, and strengthening their financial position. They're not standing still.
Okay, so that sets up the clash quite clearly. Rapido comes in with this low-cost, asset-light model using its existing network,
That's their big strength, yes, the cost structure.
while the incumbents, Zomato and Swiggy, have the dedicated focus, the proven speed, and the optimized machine.
Right. Their strength is that dedicated operational excellence and scale in food delivery specifically.
But let's circle back to Rapido's model. Isn't that core strength, using multitasking riders, also its biggest potential weakness?
That's the million-dollar question, isn't it? Or maybe the billion-dollar question in this market.
I mean, it sounds great for efficiency on paper, but what actually happens when my rider is stuck in traffic with a passenger and my food is sitting in their bag getting cold?
That is precisely the challenge they have to nail. The lack of a fully dedicated fleet immediately raises flags about service quality and, crucially, speed.
Can a rider really juggle dropping someone off, picking up a parcel, and getting my meal to me hot and fast?
It's tough. That analogy someone used about serving biryani and backseat rides with the same spoon. It's witty, but it points to a real logistical complexity, both for the rider trying to manage it all and for the customer waiting for their order. Meeting that sub-30-minute delivery expectation, which the market now demands, is going to be a massive test for Rapido's system. Can their algorithms and operations manage these multitasking riders effectively enough to consistently hit that speed? That's critical.
And history isn't exactly on the side of challengers in this market, is it?
No, it's notoriously difficult to break into. There's a reason people talk about the Zomato Swiggy duopoly. This market has seen off some pretty big names.
Like who?
Well, remember Ola tried with Ola Cafe. That didn't last long.
Right, I'd forgotten about that.
And even Amazon, with all its might, launched Amazon Food and eventually shut it down in India.
Amazon couldn't make it work. Wow.
And there were others, too. Promising startups like Thrive raised good money, but still couldn't break the hold and had to cease operations.
The saying is true. Many have tried, most have cried.
It seems to fit this market pretty well. The operational complexity, the sheer scale needed, the cost of acquiring customers. It's incredibly challenging. Rapido needs more than just a low price point. They need flawless execution. Reliability and speed have to be spot on, or they risk becoming just another casualty.
Okay, so putting aside the corporate battle for a second, why should the average person care about this? What's actually at stake here?
Well, several things. Let's start with the restaurants again.
The commission difference.
Exactly. If Rapido succeeds in offering those 8–15% rates widely, that could be a lifeline for many restaurants, especially smaller independent ones.
Giving them more breathing room financially.
Potentially, yes. More profit margin means they might reinvest in their business, maybe hire more staff, or perhaps even pass some savings on to customers through more competitive pricing.
Which brings us to the customer benefit. Lower menu prices, potentially.
That's one possibility, and certainly the appeal of those fixed, predictable delivery fees is strong. No more surge pricing shocks.
Yeah, that alone would be welcome. What about the riders?
For the Rapido captains, the promise is more earning opportunities. Filling those idle gaps between rides with food deliveries could mean a higher overall income for them.
Without Rapido having to hire loads more people, or the riders needing, say, special insulated bags just for food initially.
Well, they'd likely need the bags eventually for quality, but the core idea is leveraging the existing rider base to give them more ways to earn throughout their day.
And looking bigger picture, beyond just cheaper food.
This is a direct challenge to a very established duopoly. If Rapido gains real traction, it could force Zomato and Swiggy to respond.
How? By lowering their own commissions?
Possibly. Or maybe rethinking their own pricing strategies, maybe innovating more on service. Competition, especially from a player with a fundamentally different cost structure, can really shake things up and lead to a healthier, more dynamic market overall. Better for restaurants, maybe better for customers in the long run.
Has the financial market reacted at all? Are investors paying attention?
Oh, absolutely. Analysts are definitely watching. Firms like Elara Capital have put out notes suggesting this could impact Zomato and Swiggy's valuations and stock price targets if Rapido actually scales this thing.
So it's seen as a credible threat.
Credible enough to cause a stir. In fact, there was a noticeable dip in both Zomato and Swiggy's share prices on June 9th, right after this news about Rapido's food delivery plans really broke. So yeah, the market is taking notice.
Okay, so that brings us right to the immediate future. The rubber meets the road, so to speak. Rapido's launching a pilot program.
That's the next crucial step. They're starting in Bengaluru,
Their home turf. Makes sense.
and arguably the toughest, most competitive food delivery market in India, if you can make it there.
When is this happening?
Very soon. The timeline looks like late June or early July 2025. So any day now, really.
And this pilot is everything, isn't it? This is the real taste test, as you called it.
It really is. This is where we see if the model works in the real world. Can their system handle the pressure? Can the multitasking riders deliver?
Execution is key. We keep coming back to that.
It's paramount. Can they consistently deliver hot food on time? Can they match the speed and reliability benchmarks set by Zomato and Swiggy?
Especially in Bengaluru, where people ordering food online are known to be, well, let's say, discerning.
Notoriously picky, they will be the ultimate judges. They won't hesitate to complain loudly if the service isn't up to scratch. This pilot is a trial by fire.
Are there other risks besides just service quality?
Definitely. Rider burnout is one potential issue. If riders feel overloaded juggling rides, food, parcels, that could lead to churn or mistakes.
And for the restaurants.
For them, the lower commission is great, but it only really pays off if Rapido actually brings them enough orders. They need volume for the lower percentage to translate into meaningful income.
True. Low commission on 0 orders doesn't help anyone.
And let's not forget Rapido's own financial situation. They're reportedly burning through a significant amount of cash annually, maybe around 400 crores.
So they can't afford for this to be a slow burn.
Exactly. They need to show results, show scaling relatively quickly to justify this strategic move and keep their investors happy. The pressure is on.
So if you're in Bengaluru right now, you're basically at ground zero for this massive experiment.
You really are. You'll be seeing the first buzz, the initial reviews, maybe even spotting these captains trying to manage multiple deliveries. Bengaluru's foodies are the guinea pigs here.
It's going to be fascinating to watch how it unfolds.
Absolutely.
Okay, so let's try and wrap this up. What's the core takeaway here?
I think it's this. Rapido, the undisputed leader in bike taxis, is leveraging its massive existing network to make a really audacious play for India's huge food delivery market.
Taking direct aim at the Zomato Swiggy duopoly.
With a fundamentally different strategy using existing riders, offering much lower commissions, fixed delivery fees, it's built on a different cost structure.
But they're up against giants. Giants who've mastered speed, built dedicated operations, have deep pockets, and command immense customer loyalty.
Decades of dominance, yeah.
And this upcoming Bengaluru pilot, starting any day now, that's the crucible.
That's the taste test. It's where we'll see if Rapido's innovative recipe can actually deliver, or if the operational challenges prove too hot to handle.
But the potential ripple effects are significant. For restaurants hoping for commission relief, for riders wanting more income, for customers tired of unpredictable fees.
This challenge could bring real benefits if it forces more competition.
And for the broader market, it's just a powerful reminder, isn't it, that even the most entrenched players aren't immune to disruption.
Especially from companies willing to try a completely different angle, leveraging existing strengths in unexpected ways. It keeps everyone on their toes.
So maybe the final thought for everyone listening is this. If a company like Rapido can use its existing assets and a novel business model to challenge a powerful duopoly in a market as complex as food delivery, where else could we see similar disruptions happening? What other industries have dominant players potentially vulnerable to a challenger with a different playbook?
It's a great question. Keep an eye on Bengaluru. What happens there could tell us a lot about the future, not just of food delivery in India, but potentially about competitive dynamics in other sectors too. It's a real high-stakes drama of ambition and hustle.
Let's see if Rapido manages to serve up a success.